Welcome dear student. I am Dr. Boraste from Department of Commerce at College Nasik. Today I am going to discuss with you the example number 9 of piecemeal distribution of cash under surplus capital method. In this example, I will explain how if on the balance sheet liability side there is a profit and loss account. With this also on the asset side, if there is a profit and loss account, that means there is a loss, how it can be adjusted in the partner's capital. Also, I will explain how if there is a partner's loan and partner's wife loan, how it will be settled in piecemeal distribution of cash. Further, one more thing we will see, that is if the ratio is given in fraction, how it will be adjusted in the solution. So let us start with the example of piecemeal distribution of cash. Here is the example number 9 of piecemeal distribution of cash under surplus capital method. You can see here the example. You can take a screenshot of this example, or you may write down in your notebook or on notepad. So let us start with the example. First of all, I will explain how the example is here, and later on we will solve it under surplus capital method. Okay. A, B and C were partners in partnership firms sharing profits and losses in the ratio of half is to 1/3 is to 1/6. That means here the ratio is given in fraction, so we have to calculate it in an appropriate way. So the highest value is 6, so we have to multiply by half into 3, then we have to multiply by 1/3 into 2, and 1/6 into 1. So ratio will come 3 is to 2 is to 1. They decided to dissolve the partnership firm on 31st December 2019 when their balance sheet was as follows. Here is the balance sheet on 31st December 2019, where capitals of each partner is given A, B and C. Here one more different thing is that profit and loss account, which is given on the liability side, that is profit of current year or previous year, whatever it may be. But another additional part is given on the asset side, that is profit and loss account, which is given on asset, that is 12,000. It is loss. So what will be the adjustment, we will see in the surplus statement. Creditors are there. A's loan, B's loan, that is partner's loan, Mrs. A's loan, that is third party liability loan. So here on the asset side, some assets are here. With this we have a bank balance and profit and loss account debit balance. As per the agreement with the bank, the partners were entitled to withdraw an amount of rupees 8,000 immediately, and the balance of rupees 36,000 could be withdrawn only after 20th March of 2020. So you can see here in the bank we have cash of rupees 44,000. On the very first day, that is on the date of resolution, with the whatever agreement we have done with the bank, we are entitled to withdraw only 8,000. However, the balance is 44,000, but we are able to withdraw only 8,000. That means 36,000 balance will be remain with the bank, and it will be withdrawn only after 20th March of 2020. So here is the realization on 24th March, then on 29th March, then on 21st March. Creditors allowed a discount of rupees 2,000 in full settlement of their claim. On the liability side, there is a creditors amount, that means payable to creditors 22,000. However, creditors allowed us a discount of rupees 2,000. That means our liability will be reduced by 2,000. Simple. On the piecemeal distribution of cash, we have to mention the creditors, that is 22,000 instead of 20,000 instead of 22,000. Prepare a statement showing piecemeal distribution of cash as per surplus capital. So this is the example. You can take a screenshot or you may write down in your notebook. Now we will solve it having surplus capital method. First of all, we have to calculate surplus capital. What is surplus? Surplus is an extra amount, or we can say who the partner who have been provided an extra amount to the partnership firm. It's called a surplus capital. Here we have to calculate the surplus. How? Just note down and prepare 3 columns of partners, 1 column for particulars and 1 column for serial number. Here is the statement of surplus, statement showing surplus capital. You can see here the column serial number, particulars, and capital of A, B and C. In the very first line, you have to mention the balances as per balance sheet. On the asset liability side, the balances of capital are given 36,000, 72,000 and 48,000. That is capital balance as per balance sheet, that is 36,000, 72 and 48. As it is, we put it from our balance sheet. After that, there is a profit and loss account on the liability side, that is 24,000. Keep it in mind, if there is any profit and loss on the liability side or any general reserve fund or any general reserve or any reserve fund, whatever it may be, if it is given on the liability side, it should be added in the partner's capital as it is a part of profit which is kept aside from profit. So the rights on that amount is rights of partners. So partners are able to withdraw that amount. So the partner's capital will be increased. By using this rule, the profit and loss account given on the liability side, we have to add 24,000. As I earlier mentioned that the profit sharing ratio is 3 is to 2 is to 1, which is given half is to 1/3 is to 1/6. It will be converted into uh, accurate, that is 3 is to 2 is to 1. So here is the calculation. 12,000 will be shared by Mr. A, 8,000 will be issued to Mr. B and 4,000 to C. How it is calculated is very simple. We have to calculate distribute 24,000 in the ratio of 3 is to 2 is to 1 among the partners A, B and C. That means Mr. A will receive 3 share out of Mr. A will receive 3 share out of 3 plus 2, 5 plus 1, 6. So out of 6 share, the amount will be 12. Mr. B will receive out of 24,000, he will receive 2 share. That means multiply by 2 divided by 6. So answer will be 8,000. And in the same way, Mr. C will receive 4,000 out of 24,000. So 24,000 into 2 share, 1 share divided by 6. So this is the answer of profit sharing, profit and loss account liability side. That is, we have to add it in profit and in the capital balances. In the same way, we have to less the profit and loss balance which is given on the asset side. As I earlier mentioned that if it is given on the liability side, the partners are entitled to get that amount. That means with the addition of this profit and loss or general reserve or reserve fund, partners capital will be increased. However, if it is given on the asset side, that means there is a loss, and by using the same rule, the profit and loss account which is debit balance given on the asset side, due to this profit and loss account, that means a loss, the partners capital will be reduced. So by using this rule, we are going to deduct the profit and loss balance on the asset side. So here profit and loss, again the ratio will be same, that is profit sharing ratio 3 is to 2 is to 1. So we have to distribute 12,000 among 3 partners in the ratio of 3 is to 2 is to 1. So equal to 12,000 into 3 divided by 6. Amount will be 6,000. In the same way, we have to distribute 12,000 into 2 divided by 6. Amount will be 4,000. Here you can see 4,000. And in the same way, in case of C, so out of 12,000, we have to give 1 share to Mr. C. That is 12,000 into 1 divided by 6. Answer will be 2,000. So you can cross check at that our answer is correct or not. So 6,000 plus 4,000, 10,000, 10,000 plus 2, 12,000. That means out of 12,000, we distribute 6,000 to Mr. A, 4,000 to Mr. B and 2,000 to Mr. C. So this is the profit and loss balance, which is debit balance, which is given on the asset side. It is distributed among the partners and it will be less from the capital balances. So after the addition and subtraction, addition of profit and loss account credit balance and subtraction, here you can see profit and loss account which is debit balance, which we have to add, and if profit and loss account credit balance sorry, is debit balance and Earlier it was a credit balance. Okay. Credit balance we have to add and debit balance we have to less. So here the adjusted capital, that is 42,000, 76,000 and 50,000. How it comes? See, 36,000, okay, 36,000 plus 12,000 minus 6,000. The total is 42,000. We have to plus 12,000, but we have to minus 6,000. Amount will be 42,000. In the same way, adjusted capital of Mr. B is 76,000 and Mr. C's adjusted capital is 50,000. Okay. Now we can solve it by using profit sharing ratio. Profit sharing ratio is 3:2:1, which is very easy. After that, we have to calculate unit capital. How unit capital we can calculate? It's very easy. Adjusted capital or capital, whichever is higher. Here capital is less and adjusted capital is higher. So adjusted capital divided by profit sharing ratio equal to unit capital or unit values. So here D divided by E, answer is D divided by E, that is adjusted capital divided by profit sharing ratio. So 42,000 into divided by 3, you can solve it here. 42,000 divided by 3, answer is 14,000. So here answer is 14,000. 76 divided by 2, answer is 36,000. And 50,000 divided by 1, answer is 50,000. As I earlier mentioned in the earlier videos that you are allowed to use the calculator, but you can use digital calculator, not a mobile calculator. So here the answer is 14,000, 38,000 and 50,000 by dividing the capital by its profit sharing ratio. So with about after that we have to consider the least amount of unit capital or unit value. So here 14,000, 38,000 and 50,000. 14,000 is least amount, that is less amount. So it should be a base capital. Here you can consider as a base capital for calculating the proportionate capital. So in the next line, just write down proportionate capital. Proportionate capital equation is base capital into profit sharing ratio. So here we are going to consider 14,000 as a base capital, that is C's capital, A's capital. So here base capital, whose base capital? Base capital of Mr. A is considered as base capital. So base capital 14,000 into profit sharing ratio. For 14,000 into 3, that is 43,000. 14,000 into 2, that is 28,000. And 14,000 into 1 is 14,000. So we got the proportionate capital. After getting the proportionate capital, our next step is surplus capital or adjusted, which is adjusted capital minus proportionate capital. So here you can see adjusted capital is 42,000 minus proportionate capital 42,000. So answer is 0. And 76,000 of B minus 28, answer is 48,000. 50,000 minus 14,000, answer is 36,000. Which means a surplus capital of B and C is 46,000 and 48,000 and 36,000. So here is the answer. After that, we have to find out the absolute surplus of particular partner. Here we got a surplus of Mr. B and C, but we have to find out one partner's capital. That is absolute capital, absolute surplus capital. So here again we have to repeat all the stages. That is profit sharing ratio again will be 3:2:1. But we are not going to mention in the column of A. So 2:1. Our next step is unit capital, that is profit divided by surplus capital divided by profit sharing ratio. So here 48,000 divided by 2, answer is 24,000, and 36,000 divided by 1, answer is 36,000. So the answer is 24,000 and 36,000, that is unit value or unit capital. Out of these two, we have to consider a base capital, which is the least amount. Out of these two, 24 is the least amount, 36 is the higher amount. So 24,000 will be base capital. Here we can call as base proportionate capital. How we can calculate? Base capital of Mr. B. Mr. B's capital is base capital. We have to consider as base capital of Mr. B 24,000 into 2 equals to 48,000. In the same way, 24,000 into 1 equals to 24,000. So proportionate cap, we get proportionate capital, that is 48,000 and 24,000. After that, we can calculate the absolute surplus. What is absolute surplus? Surplus minus proportionate capital. So 48,000 minus 48,000, answer will be 0, and 36,000 minus 24,000, answer will be 12,000. That means here we got a surplus, that is absolute surplus of Mr. C. Whenever we will pay the amount to the partners, at that time Mr. C will get 12,000 firstly. After that, Mr. B will get 48,000 and Mr. C will get 36,000 again. But here, after getting 12,000 in the earlier step, Mr. C will get here 12,000 less amount, that is 24,000. So this is very simple statement showing surplus capital. After getting the surplus capital, we have to prepare a priority of payment, and priority of payment is based on the liability side, your liability side, whatever it may be. So here on the liability side, we have a liability of creditors, A's loan, B's loan, that is partner's loan, and Mrs. A's loan. That means we have a third party liability of creditors and Mrs. A's loan. After that, we have a partner's loan, that is partner's loan as a liability. And after that, we will pay to the partners their capital sharing ratio or whatever it may be as per this surplus capital method. Okay, here third party liability. There is only two liability, creditors and Mrs. A's loan. That is 20,000 creditors and 20,000 Mrs. A's loan. As I earlier mentioned that 22,000 amount of creditors is given on the liability side. Here you can see the liability side of or the liability of creditors is 22,000. But here one sentence is given: creditors allowed a discount of rupees 2,000 in full settlement of their claim. The claim of creditors was 22,000 and they allow a discount of rupees 2,000. That means from the firm's point of view, our partnership firm's point of view, we got a discount of rupees 2,000. That means our liability is decreased. So here the liability is decreased, creditors 22,000, discount is 2,000. That means balance creditors only 20,000. So creditors will be 20,000 and Mrs. A's loan is 20,000. In this stage, if we don't have an amount of rupees 40,000, 22 creditors and 22 Mrs. A's loan, at that time we have to use the ratio, that is 1:1. 20,000 is to 20,000. That means 2:2 is again reduced to 1:1. Okay. Now after the payment of third party liability, we have to pay partners loan. We have two partners who provide a loan to the partnership firm, that is Mr. A and Mr. B. Here you can see Mr. A's loan is 12,000, Mr. B's loan is 6,000. So in this statement, we have to pay the partners as their loan. So for the payment of this partner, we must have at least 18,000. And if we don't have 18,000 on that particular moment, we have to use the pro rata, or that is the ratio of the liability, that is 12:1. Here you can see 12:6. So it will be reduced. 6 ones are 6 and 6 twos are 12. So ratio will be 2:1. Okay, after that our next payment is absolute surplus. Here you got the absolute surplus of Mr. C, that is 12,000. After absolute surplus, we have to pay surplus. Surplus is 48,000 and 36,000. 48,000 of Mr. B and 36,000 of Mr. C. But out of 36,000, in the earlier stage, we have already paid 12,000 to Mr. C. That means out of 36,000, Mr. C get already in the earlier step 12,000. That means here or in this stage, he will get 24,000 of amount. So C will get 24,000 and B will get 48,000. If we don't have a 72,000, at that time we have to use the ratio, that is 2:1. And after the payment of this surplus capital, we are be able to pay all the partners in profit sharing ratio, and we are allowed to pay all the partners. Okay. Now just write down the statement of piecemeal distribution of cash. From this point of view, first of all, you have to consider what kind of column or what column you have to draw. Here are the columns. Statement showing piecemeal distribution of cash as per surplus capital method. First of all, write down it on the header. That is statement showing piecemeal distribution of cash as per surplus capital method. Few columns are fixed. So debt column is fixed, particular is fixed, cash column is fixed, total liability column is fixed. So these four columns are fixed, debt, particulars, available cash and total liabilities. After that, we have to consider the priority of payment. Here you can see there are two third-party liability which is unsecured liabilities, that is creditors and Mrs. A's loan. So first column will be of creditors and second will be of Mrs. A's loan. After that, we have a partner's loan, that is Mr. A and Mr. B's loan of 12,000 and 6,000. That means after these two column, we have to prepare these two column, that is A's loan and B's loan. Partner's loan, A's loan and B's loan. And after that, we can draw a column of three column of capital, that is A, B and C. In this way, you can draw a column of piecemeal distribution of cash. When you are going to draw a column in your notebook, keep it in mind, start the drawing from right side. So first of all, write a column of C, draw a column of C, after that draw a column of A, after that draw a column of A, B and C. When you will draft these three columns, you will be able to view how much space is available in your notebook, and then you have to draw a partner's loan column, then third party liability. After that, you can draw this column. Better way, use two pages, joint pages for this kind of solution. It will take more space, so it will be easy for you by using two pages, that is joint pages. Okay. Now just go to the solution. How you have to solve this example? First of all, you have to mention the balances given as per balance sheet. So let us start this solution. First, on 1st January 2020, here already mentioned date 2020. That is, the year is mentioned. We have to just mention month and date. So the balance sheet date is balance sheet as on 31st December 2019, and the firm is dissolved on the same date. Here you can see they decided to dissolve the firm, partnership firm, on 31st of March 2019, when their balance sheet was followed. So on the very next day, we put the balances in our piecemeal distribution of cash, that is balances as per balance sheet. Here creditors is rupees 22,000, Mrs. A's loan is 20,000. As per this problem, you can see here the creditors amount is payable 20,000, but they allow a discount of rupees 2,000, so we will adjust this discount later on. Here you can see that partners loan 12,000 and 6,000 as per the balance sheet given, 12 and 6. Mrs. A's loan is already mentioned 20,000, and capital of all the partners, that is 36,000, 72,000 and 48,000. As I earlier mentioned in the surplus capital statement, that the profit sharing ratio, the profit and loss account which is given on the balance sheet liability side, we have to add it in the partner's capital, and the profit and loss account which is debit balance given on the asset side, we have to deduct it from the capital balances. As we have already seen here, the profit and loss account credit balance of rupees 24,000 is added in the partner's capital, and profit and loss account debit balance of rupees 12,000 is deducted from the capital. That is 12,000, 8,000 and 4,000, again 6,000, 4,000 and 2,000, which is deducted, and this one is added. So here we have to do the same thing, that is add profit and loss account balance 24,000 and less profit and loss account balance 12,000. Okay, here you have to distribute in the profit sharing ratio, that is 12,000, 8,000 and 4,000. Again it will be same, which is to be deducted 12,000, that is 6, 4 and 2. How it is calculated? It is very easy. You have to distribute this 12,000 into profit sharing ratio, that is 3:2:1. And after that, we got a balance of capital, that is balance total liability will be 2,28,000. Creditors are still same. Mrs. A's loan is still same. Partners loan are same, but our capital is adjusted, that is 42,000, 76,000 and 50,000. So here is the balances of Mr. A, B and C, that is capital balances 42, 76 and 50,000. Here you can see 42, 76 and 50,000, which is adjusted capital. After that, we have to adjust a discount, that is discount from creditors. So our total liability will be reduced and creditors will be reduced by 2,000. After the deduction or of discount from creditors balance which we have to pay, that is 20,000. and still Mrs. A's loan is payable 20,000. So balance with our hand of liability that we have to pay, that is 2,26,000. Now we can withdraw a cash from a bank of rupees 8,000. Here you can see in the example it is already given. As per the agreement with the bank, the partners were entitled to withdraw an amount rupees 8,000 immediately, and the balance of rupees 36,000 could be withdrawn only after 20th March. That means on the very first day we are going to withdraw an amount of rupees 8,000. So here we withdraw 8,000. Now we have a cash. Go to the priority of payment. Here is the priority of payment. First of all, we have to pay to creditors and Mrs. A's loan, that is 20,000. 20,000. The total we have to pay 40,000. But here we don't have a amount of 40,000. We have only 8,000. That means we have to distribute this 8,000 among the creditors and Mrs. A's loan in the ratio of 1:1. So less paid to creditors and Mrs. A's loan ratio is 1:1. Total cash will be reduced by 8,000. Total liability will be reduced by 8,000. Creditors will get 4,000, that is half for half amount, and Mrs. A's loan will get 4,000. After that, we have to calculate the balances. So here the balance 8,000 minus 8,000, balance is 0. The total liability was 2,26,000 minus 8,000. The balance is 2,18,000. Total creditors was payable 20,000 minus 4,000. Balance will be 16, and the same balance will be of Mrs. A's loan. In this stage, we have finished our cash, so we have to call our first realization, which is given on the 24th of January, that is 68,000. So here the first realization on 24th of January, 68,000. First of all, we have to pay the creditors and Mrs. A's loan. In the earlier stage, we have already paid 8,000. Now we have to pay 32,000 because the total payment of these two liabilities was 40,000. We already paid 8,000. That means still we have to pay 32,000. So we have a 32,000 because now we have 68,000. That means we can pay 32,000 to creditors and Mrs. A's loan. So less paid to creditors and Mrs. A's loan, 1:1. Total cash will be reduced by 32,000. Total liability will be reduced by 32,000. Creditors will get 16,000 and Mrs. A will get 16,000. So balance cash in our hand is 36,000 after the payment of 32,000 to creditors and Mrs. A's loan. Still we have to pay liability of rupees 1,86,000, and the balance of creditors and Mrs. A's loan is nil. Now we have 36,000. Go to the next priority, to whom we have to pay. See here, partners loan. Partners loan of Mr. A and B, which is rupees 12,000 and 6,000. That means we must have 18,000 in our hand. If we don't have 18,000, at that time we have to use the ratio, that is 2:1. So you can see here we have a 36,000 and we have to pay only 18,000. That means we can pay 18,000 simply. So let's pay to A's loan and B's loan, that is partners loan, in the ratio of 2:1, but there is no need to mention the ratio because we have insufficient amount. So cash will be reduced by 18,000, total liability will be reduced by 18,000. Mr. A will get 12,000 as his loan and Mr. B will get 6,000 as a part of a loan. So after the payment of partners loan, we have a balance of rupees 18,000 in our hand, and total liability in our hand is 1,68,000. Here you can see the partners loan is nil of both the partners. So we have 18,000. After the payment of partners loan, our next payment is absolute surplus to Mr. C, which is 12,000. So we have to pay 12,000 to Mr. C. In the next line, write down less paid to Mr. C, absolute surplus, that is 12,000. So cash will be reduced by 12,000, total liability will be again reduced by 12,000, and Mr. C's capital will be reduced by 12,000. After that, go to next line and write down as a balance. Cash will be 6,000 in our hand, that is 18,000 minus 12. Balance in our hand is 6,000. Total liability will be in our hand, that is 1,68,000 minus 12, that is 1,56,000. Still we have to pay 42,000 to Mr. A, 76,000 to Mr. B as it is. The balance is available, and Mr. C's balance is reduced by 12,000. Earlier his balance was 50,000. we paid 12,000, that means still we have to pay 38,000. The total liability column is important. Why? You can cross check at any moment. So here the total liability still we have to payable 42,000 plus 76,000 plus 38,000. You can use it by using calculator. The sum is rupees 1,56,000. So here the total liability is still payable 1,56,000. It simply means that we are on the correct path. Now less paid to Mr. B and Mr. C in the ratio of 2:1 as surplus. Here is the next payment, surplus capital of Mr. B and C. That means here we must have 72,000, 48,000 to Mr. B and 24,000 to Mr. C. Actually, we have to pay 48,000 to Mr. B and 36,000 to Mr. C, but in the earlier stage we have already paid rupees 12,000 to Mr. C. That means in this stage we have to pay only 24,000. Out of 36,000, Mr. C received 12,000. That means simply his payment is payable rupees 24,000. It simply means that Mr. B will get 40,000, 48,000, and Mr. C will get 24,000. Here another meaning is that in this stage if we don't have an amount rupees 72,000, that is total of these two surplus amount. If we don't have 72,000, we have to use the ratio, that is 2:1. Here we have only 6,000. That means we don't have a 72,000. We can pay 6,000 in the ratio of 2:1, that is surplus, less paid to Mr. B and Mr. C in the ratio of 2:1. So cash will be reduced by 6,000, total liability will be reduced by 6,000, and it has to be distributed to B, 2 share and 1 share to Mr. A. So how you can calculate equal to, you can calculate here 6,000 into 2 divided by 3. Answer is 4,000. So Mr. B will get 4,000 and Mr. C will get 2,000. How it is calculated? 6,000 into 2 divided by 3 and 6,000 into 2, 1 divided by 3, 4,000 and 2,000. After the payment of surplus capital, in our hand there is no cash. So cash is 0. Still we have to pay liability, total liability of 1,50,000. So it is the total of this unpayable liability, unpaid liability, that is 42 plus 72 plus 36, that is 1,50,000. Okay. Now cash is finished, so we can call our next realization, which is on 29th of February, that is 72,000. Here you can see on the 29th of February 72,000. Further you have to keep it in mind one thing, that after 20th March we could withdraw 36,000 from the bank, but here is the 29th February, that means we have 1 month. So 72,000 in our hand. Now the second realization is of 72,000. We can pay first of all Mr. B and Mr. C, which is the first priority payment. Here you can see we have already paid 6,000 to Mr. B and C, and the payment of Mr. B and C as a surplus capital was rupees 72,000. That means out of 72,000 we have already paid 6,000, means still we have to pay 66,000 to Mr. B and C. That means we have to pay 66,000 in their profit sharing ratio, and we have a sufficient amount 72,000. So we can pay less paid to Mr. B and C in the ratio of 2:1. That is 66,000. Cash will be reduced, total liability will be reduced by 66,000. Again here you have to calculate 44,000. How 44,000 it comes? 66,000, which is the total payment. Out of this 66,000, Mr. B will get 2 share. So you can I am going to calculate over here, equal to 66,000 into 2 divided by 3. The answer is 44,000. So here the answer is 44,000. And in the same way, you can calculate 66,000 into 1 divided by 3. Mr. C will get 22,000. So after the payment of 66,000, cash in our hand is rupees 6,000. With this we have still payable liability. We have to pay liability of rupees 84,000. After the payment of surplus capital, Now we have been paid a surplus of rupees 48,000 and 24,000, that is 72,000. Now whatever amount we have to pay in the profit sharing ratio. So here we have 6,000. The next step is less paid to A, B and C. That means all partners in profit sharing ratio. Here you can mention paid to all partners in profit sharing ratio. So that is profit sharing ratio is what? 3 is to 2 is to 1. So you can pay in the profit sharing ratio, that is 3 is to 2 is to 1. Cash will be reduced by 6,000. Total liability again will be reduced by 6,000. Mr. A will get 3,000, Mr. B will get 2,000 and Mr. C will receive 1,000 as a cash. So here the total cash is now again nil. That means we paid all the liabilities. After that we paid all the surplus, absolute surplus, and now we are in the phase of payment to all partners in profit sharing ratio. So here the profit sharing ratio is 3 is to 2 is to 1. In the profit sharing ratio we paid the available cash of rupees 6,000 to all the partners, that is in the ratio of 3 is to 2 is to 1. So we can calculate here equal to 6,000 into 3 divided by 6. The answer is 3,000. In the same way, two share will get by Mr. B and one share will be get by Mr. Now we have a balance cash is 0 and still we have to pay a liability of 78,000. Here we have another revenue, that is another realization of rupees 24,000 on 21st March. In earlier adjustment, it is given that as per the agreement with the bank, the partners were entitled to withdraw an amount of rupees 8,000 immediately and the balance of rupees 36,000 could be withdrawn only after 20th of March. That means we are going to receive 36,000 after 20th March. We have a date of 31st March. For 21st March. On the 21st March, we are getting 24,000 plus 36,000 from the bank. 24,000 from realization and 36,000 from the bank, which was a cash in our bank, which was 44,000. Out of this 44,000, on the very first day, we withdraw rupees 8,000 and the balance of rupees 36,000 on the 21st of March. So here we have a third realization, which is third and final realization of rupees 24,000. After that we are going to add a remaining bank balance which is withdrawn from the bank, which is 36,000. Earlier in our bank there was an amount of 44,000. Out of 44 we have already withdrawn a bank balance of rupees 8,000. Here you can see the bank balance of rupees 8,000 on the very first day. Now we can withdraw the remaining balance, that is 36,000. After getting 36,000 in our hand, cash becomes 60,000. So we have 60,000 and we can pay 60,000 to partners, all partners. So let's pay to A, B and C, that is profit sharing ratio. So here is the profit sharing ratio, 3 is to 2 is to 1. Cash will be reduced by 60,000, total liability again will be reduced by 60,000 and Mr. A will get 30,000, Mr. B will get 20 and C will get 10,000. How it is calculated? It's very simple. We just going to distribute 60,000 in the ratio of 3 is to 2 is to 1. That means Mr. A will get 3 share, Mr. B will get 2 share and Mr. C will get 1 share of rupees 60,000. So here is the calculation of 60,000 into 3 divided by 6. Answer is 30,000. That means Mr. A will get 30,000. In the same way, Mr. B will get 2 share, that is 20,000. Here answer is 20,000. And in the same way, Mr. A will get 1 share, that is 60,000 divided by 6 into 1, that is 10,000. So in this way, we paid all the amount to all the partners in profit sharing ratio. Now we don't have cash in our hand. That means our cash is finished and now in an example there is no realization. All the realization have been finished. That means of selling of all these assets we got these three realization, and after this realization we paid all the liability which was given on the liability side. After the payment of all the liability and partner's capital, still we have to pay 18,000, but which is unable to pay. Now we don't have a cash. That means we cannot pay 9,000 to Mr. B. We cannot pay 6,000 to Mr. B. Sorry, we cannot pay 9,000 to A, 6,000 to B, and 3,000 to C. That means Mr. A will bear a loss of rupees 9,000, Mr. B will bear a loss of rupees 6,000, and Mr. C will bear a loss of rupees 3,000. It simply means we are unable to pay 18,000. So the total of this the total of unpaid liability, which is 9 plus 6, 15, 15 plus 3, 18. So 18,000 is called as realization loss. As I earlier mentioned, the total liability column is important. Why it is important? The total liability column unpaid amount or balance amount must be equal to unpaid liability or unpaid capital balances. So 9 plus 6, 15 plus 3, 18. This is the total of these three column is 18, and the same amount is on the liability side balance. So that is realization loss. It means that our example is up to the mark and correct. So you can cross check it with your balances, available balances 18,000 and available balances, that is unpaid balances of 9, 6 and 3, that is 18,000. So with this, I would like to say thank you. Thank you very much. In the next example, we will see another type of liabilities and priority of payment. So thank you. Thank you very much.